Hey traders, happy Friday gang. Welcome to Charts and Coffee. We have a quirky session today because today, of course, is Good Friday and the Federal Reserve is speaking today, not one, but two members. Daly is going to be speaking today, and then Powell himself. We just had the PCE release today for really, frankly, inexplicable reasons where the futures markets are closed. The stock market is closed, and it is, of course, Good Friday. But what we did do is realize that, hey, we're here to trade the markets we have, not the markets that should be closed. And we took a look at the Euro US on the Forex side of things and the Aussie yen, because that market, foreign exchange, like the commerce, the conversion of one currency to the other between banks, institutions, corporations, this continues nearly 5.5 days a week, and but 2 days, but two holidays a year it is open, and that's actually New Year's Day and Christmas Day. So we have a little bit of an insight into the way in which PCE was reacted to. And by the way, you can check that out. You can check that replay out over at my YouTube channel, as well as a simpler YouTube channel and my Twitter. So I'm just actually curious. Let's go see what this thing is doing. So this is the Euro US dollar. And what we noted was that, well, it still is. It's moving higher. So this is indicative of US dollar weakness, which typically reflects at least that the rate cut expectation is on the right path. And that may become Monday. We'll see that the June month is adjusting to reflect a little bit more than a 61% expectation for a rate cut. And then the other pair that we looked at during that session was the Aussie yen. Aussie yen's not holding as strongly. I'd like to see the Aussie yen strong to indicate not only the weak yen, but also the strong Aussie, which is usually not a necessary thing, but a good thing to see when equities are moving higher. You can check that replay out, like I said. So let's get on with our charts and coffee and talk about what we've got going on in this environment where we're switching from the Q1 psychology to Q2. We did touch on this as well. What is my Q2 outlook? Well, a lot of the Q2 outlook has a lot to do with, yes, of course, what happened quarter to date in those high concentration weighted there we go, sectors. I'm actually going to do something here real quick since the market is closed. Let me show y'all something. So if you're looking at the, for example, the NASDAQ, that's of course QQQ, NASDAQ futures. We're primarily looking at XLK, XLC, XLY, and let me move this, we can see that. There we go. And SMH, right? Those are your cylinders under the hood, if you will. With the S&P, we're looking at the XLK, the XLF, and the XLV. And I'd say you could throw the XLE in there as a distant fourth. Dow is actually an XLF conversation. The number one weighted sector in the Dow are financials. These are all ETFs, by the way. If you've been watching Charts and Coffee, you're probably fairly familiar with this. But just in case, XLK is technology, XLC is communication, XLY is consumer discretionary, SMH is semiconductors. And so if we take a look at the Dow, XLK, XLV, and then we end up with XLE, and then XLI, you could throw in there sort of IYT. They're very similarly composed in terms of stocks. And then the Russell, of course, 2000 is really just a single ARE. It's regional banks, right? So that's the way in which as I like to say, the cylinder and the motor, or the boats and the tide, any one of them analogies that I've used over the years. This is why we pay attention to what you see along the right side. So now that you know what's under the hood, let's talk about not quarter to date, because yeah, some semiconductors are up there, but let's remember that is primarily NVIDIA, right? NVIDIA is so heavily weighted in this group. That's primarily NVIDIA. So it's really a one trick thing right now. SMH is NVIDIA, NVIDIA is SMH. I would have rather seen what we saw earlier in March, where we had widespread. We had 4, 5, 6 stocks within the SMH moving higher. What's really notable is XLE. What's really notable is the lagging nature of XLK and where XLI is. So this is quarter to date, but we know what happened in March, recency bias being a thing, is probably going to map to Q2 a more significant way. So what we'll do is we'll adjust the look back to look at the month to date, or even the last month. It's pretty much the same look, right? However you want to look at it, 1 month back versus month to date. But this would be March only. And you'll notice XLE way there at the top. Month to date, the last 1 month, you'll see XLE, SMH, it's still a very similar conversation, but XLE really has broader participation in Chevron, Marathon, Exxon. Exxon and Marathon are probably your two best trends right now. Chevron's getting there. There are a lot of stocks in that energy ETF that are moving higher. We want that participation within the sector. We want that high concentration weighted participation, which is pretty cool. KRE is a surprising one. Seeing regional banks, that's going to benefit the Russell a lot. You'll probably hear a lot about, wow, the Russell's at new highs. You want to know when the Russell's moving higher? Keep an eye on KRE and keep an eye on market structure. Maybe we'll take a look at the Russell here in just a bit. So this is definitely what we're looking at the month to date, and we'll see how that moves into April and see how that moves into Q2. But this is where the momentum is. This is where the trends are. This is where the attention is. Okay. All right. So as always, the best part of our show are your questions. If you have any, feel free to type them on in. Jack says, thanks for sharing. Oh, the investing rules. Yeah, trading rules, investing rules, let profits run, cut losses quickly. I recently closed my final position after previously scaling out too soon. Jack, I'll tell you, I struggle with that too. Let's talk about the thrill of victory, the agony of defeat for a moment, kind of along the lines of Jack's comment there. This week, I took a loss in Visa. I also took a loss in JP Morgan. Let's talk about losses for a moment. I talk about, look, are we doing well on the year? Yeah, we're doing really well on the year, but that doesn't help anybody. What helps people is when folks like myself say, we lose sometimes. But what's the difference between a trader who spent the last 30 years of her career growing accounts and helping people do the same, and folks who are not? It's not necessarily the wins. There are people out there with bigger wins than I have, but they also have bigger losses. And that's what blows up accounts. That's what keeps P&Ls from rising from the lower left to the upper right of the chart. And that's the difference. What I have found when I talk to traders that are far better than I'll ever be, what I realize is they have mastered their discipline around risk management. And so, cutting losses is so big, so important. Visa, I was wrong. Right? We looked at a setup. It was a valid setup. Was it the best outperformer? Probably not. But it was a valid setup on an opportunity that Visa might have overreacted to the news, hit a zone that made sense, and I was wrong, right? Did I wait for max debit? No. Once we lost a certain percentage of premium, out, right? Just get out. Take the paper cut, take that small sting and get out. And that allows us to focus on, look, I'm talking about a loss. We went 5 for 6 in the last week, pretty much. We had, all right, I'm actually looking at my other screen where we have some of these positions, or actually all of these positions except for BITO are still open. So when I can free my bandwidth to take a small loss, to Jack's point, and continue to benefit from the uptrend in AbbVie, continue to benefit from that launch we saw nicely on XLI. We have also Freeport McMoran and gold. These are all positions we're taking into April. These are positions we took over the weekend. These are already positions we've taken profits on, and we'll let that move go. So as much as I'll let the trends continue trending, when I have a setup that isn't responding in a way that I'm expecting it should, got to cut it. And there's got to be metrics for that, right? We've got to have a way to measure that. And that's exactly what we've been doing with top tier all year long, right? That's exactly what we've been doing with it. And what does that mean, top tier? I think, I'll tell you, we've been working on this for 13 months now. By the time it comes out, it'll be 13 or 14 months. Testing takes a long time. Even the desire to want to upgrade, to think about a next generation, adapting, updating, anything we're doing should not be because we had a bad day or a bad month or even a bad quarter. And I haven't had any of those, but I noticed that I was getting stopped out. How many folks out there have been stopped out only to see the trade move in the direction? I mean, that's almost the comical part of trading. I usually don't have that. That's not usually what happens with me. And all of a sudden I started noticing it happening infinitesimally more irritatingly about 2 years ago, and a little bit more about a year ago. And it persisted. So I thought, wait a minute, something else is under the surface. Something else is moving uh, the price action in a way that I'm somehow not accounting for. I'm actually looking for one of my favorite images that I like to share. It's my iceberg. Some of you are probably very well familiar with that iceberg image. Where is it? Where is that iceberg image? Oh my gosh, there it is. Love this image. So most traders live here in price. That's where most do. If you're part of the Sector Secrets Mastery, if you've been joining me in Charts and Coffee, you know we don't live here. That's the surface. It's fun to splash around, but underneath that is the rest of what moves the markets, the symbols that we trade, volume, volatility, time. That's what most traders don't see. That's what sinks ships. But I started realizing things were not moving in a way that I, for the past 30 years, expected them to. And so we went back to the drawing board. We went back to the laboratory and we said, hey, we've got to start looking at what else is moving the market. And then things like GameStop happen. And more symbols are having 0 days to expiration options, and that popularity is growing. The volume is growing around that. And we know algorithms account for a lot of the volume each day. And all of a sudden we realize there are market participants at scale that we weren't talking about even 2 or 3 years ago. And that has made a difference. So when we're looking at the trades like gold, I'm not waiting for mean reversions anymore. You know, I spent most of my career quite happily buying dips to the mean. And I use a 34 bar mean. Okay. This is not a 34 EMA any longer, right? This is a 34 bar mean. This is the top tier. All right. So what I love about these tools is they look very familiar. Wait a minute, Rog. This looks like what we've seen on your charts. For some of you, see me for over a decade, but they are in a different spot. I like that they look familiar because I'll tell you what, it was not an easy thing to say what I've been doing successfully for 30 years needs a next gen approach. I need to open my mind and ask what else is influencing it. So I wanted there to be a certain familiarity because I've even grown accustomed to the look, right? After 30 years, you think that's pretty common. And it is. So this is no longer a 34 exponential moving average. It's a 34 bar mean reversion where we're factoring in all those things that are creating a problem. But that wasn't enough. We started there. I said, wait a minute, we're still not getting down there on a regular basis. Well, what else is affecting it? And then some of you might know we introduced last year. So these are all the things that we've been incrementally doing. Last year, about a year ago today, from now, we released the daily price movement ranges. Wait a minute, volatility support is making a difference. So that's, by the way, how we got into GLD. So for those of you who are wondering, yeah, Rog, why is GLD, it didn't hit the mean? It's not even anywhere near it. Why is it a long position? You know, why is Freeport McMoran, and these are mastery trades, gang. Why is this a long position? We're nowhere near the mean. Now, you might say, Rog, but how often does the mean come into play? When it does, there you go. There's Abby. That's a mean reversion, right? So there are going to be times when we have to say to ourselves, something else is, again, under the surface, influencing what's going on. And yeah, Freeport McMoran kind of gave us some fits. This wasn't an easy path, but I'm super happy we at least looked under the surface. So that's another one that we're looking at as well. And that kind of goes back to Jack's comment. Yeah, Jack, you opened the can of worms there. I love it. Thank you, my friend. All right. Next up, Ren says, thanks for going live today. You know, I wanted to talk about the PCE. Again, it's such a quirky day where the Federal Reserve is going to be speaking, FOMC daily, Fed Chair Powell. We got the PCE. I showed you all the reaction. It does seem that there's no reason for the Federal Reserve to change course. There was a revision of the previous PCE up a tenth. So in many ways, you might say, well, isn't that worse? I don't know how it's going to be perceived en masse, but I do know this. Yes, the previous number was revised upwards 1/10 from point 0.4 to point 0.5. But this came in, today's number came in at 0.3. That's a bigger drop in inflation. So how is the broader average, how are the broader averages, how are bonds, how are dollars going to respond to that? So far, they're responding to not the, oh my gosh, the inflation was higher the previous release. They're responding to that's a bigger drop from 0.5 to 0.3 rather than 0.4 to 0.3. And that seems to be the way in which it's responding. But we'll definitely see. And yeah, Ren, yeah, we already have a setup in gold. I won't be trading gold today, obviously, but we're already long gold based on those factors that I was just mentioning with Jack's comment, which is, hey, what are the things under the surface that are moving gold, bonds, the indices? Let me pull up gold because yes, we do have this open position, but let me show you what we did. There we go. So this is what we did, and let's see, if it resonates with anybody. Do I want to buy now? Here's the thing, gang, and it breaks my heart. Most traders will see a candle like what happened on the 28th, yesterday, Thursday. So I got to get into gold. We got into gold based on not the bullish momentum, but the bearish momentum into support. This is markedly a different trade. We could all say that's a long position on long calls, and this could be a long position. Do you see an advantage of one over the other? That's what my career is built upon. My career is built upon we can be right. We can all make money. Momentum traders can make money. Uptrend followers can make money. Those late to the party can make money. Those buying dips can make money. But who's going to have the best risk reward? Who's going to have the lowest cost basis? And who's just going to have a more advantageous edge to the follow through? The dip buyer, right? The dip buyer. And that's what we did. We bought the dip. GC was a perfect way to do it. MGC was a perfect way to do it, as was GLD. And that's the way we did it. We got calls in GLD. So this is already a long position. There's no trade for me here, right? The trade came either here or here or here, right, Ren? So no, I do not. I see follow through, but no setup at the moment, right? Okay. So that is what we're looking at. That's what we're looking at. So ultimately what we want to think about is, and this might be some tough medicine. I'm not sure, but I say this because it's so early in the year. I don't want the rest of the year, the other 3 quarters, to be a waste. We are in a bullish environment. All right. If you're waiting for the shoe to drop, any shoe to drop, keep them laced up. This is an uptrend. This is the kind of environment where I think it was Wednesday, 3 of our members, some of which have been with us for the year, I think 2 of them were with us for just the last month during our 1-month trial that I know a lot of you took advantage of, said, wow, we already doubled our account. That's what I like to hear. It's not me. It's buying the dip in an environment that's carrying prices higher. It's our job to be able to identify them. So when we look at gold's uptrend or the uptrend in the S&P or the uptrend in the Dow or the uptrend in XLI, which is an open position we have, right? This is how you grow an account. You follow the trend. You don't naysay it. You don't doubt it. You don't top pick it. This is how you grow accounts. You remember what was so great about 2020? It may not be the same speed, but that's what we're dealing with right now. And if you're thinking to yourself, gosh, Rog, that's not the analysis I'm hearing, and this is not what I'm doing, and no, my account hasn't doubled. I'm by no means saying that's typical, but it's possible, right? And I'm just telling you what some of our members are doing based on what we did and what we still have open. So on Wednesday, by the way, and I want to make sure everyone gets a chance to register, we're gearing up to release top tier. This is what is allowing me to find the trades that I'm finding, not getting stopped out in the way that was irritatingly happening, starting at about 3 years ago. Our entries are absolutely able to withstand dips or even capitalize on them in a better way. So I found a better dip buying methodology. And it has to do with the fact that, again, 0 days to options expiration, algos, even the behavior of retail traders has changed markedly, I'd say easily since 2020. Otherwise, I'd be pretty content moving on the way I have for 3 decades, but we had to adapt. And so I'm going to talk about the why and the what, and frankly, the results, right? So I know I was going to reveal the big March number, but I think I'm going to do it during the webinar. So I know a lot of you saying, Rob, what's the update on TradesViz? It's more. That I can tell you. And so we're going to talk about the good, the bad, the ugly for March. And by the way, we spent a lot of time talking about those small losses that we took. Visa was one of them. JP Morgan was another one of them. I'm trying to remember. I like talking about losses. And here's my theory. Traders who win a lot don't mind talking about losses because that's not their regular reality. Those traders that do nothing but talk about wins, I always say, "Oh, you lose a lot." Right? That's what I want to make sure everyone realizes. Losing well. Losing well and buying dips. That needs to be on a t-shirt. Losing well, buying dips. That's what I'm going to be talking about on Wednesday. All right, let's see what other questions we have coming up here. Sadiq, I'm finding the market to be choppy when prices consolidating in the 34 EMA wave on the hourly. Is it fair to say and approach entries with a far from a moving average concept? Is it fair to say and approach entries with a far? Well, so this is what I'm saying, Sadiq. Two things. One, sometimes the daily price movement range, and I don't know if you have an example, that'd be great. But first of all, I think the most important thing is don't limit yourself to the hourly, right? This is something that we do a lot of in the mastery. We talk about the fact that multiple time frame confirmation simply does not work. Jumping around, 1 week it's the monthly chart we're looking at. The next week it's the daily. Oh, now it's a 2 hour. Now it's a 30-minute. Oh, let's all day trade now. Who can keep up? It's hard enough to find the symbols that are moving. And now I've got to, jump through a hoop on fire as to which magical time frame is also the one. So I stopped doing that. I day trade on the 5. I short-term swing trade on the 1. And I swing trade longer term on the daily. And I look at the individual, right? I'll go down here to our top tier structure and I'll say, hey, what is the structure on the hourly versus a 5-minute or the daily? And then when I find where the follow through is best, that's the time horizon that I'll approach. So if the 5-minute of the hourly is ugly, chaotic, choppy, like you said, see if you can find a better trend elsewhere. Maybe it's the daily. Maybe it's not that symbol at all, right? Maybe we need to step back one more step and say, am I really playing the relative outperformer? That was my mistake, by the way. Hey, I'm happy to talk about mistakes. That was my mistake with Visa. I should have been playing a relative outperforming stock within the XLF. There are plenty of them, and I've played them on and off numerous times. We've been in and out of Visa successfully this quarter. JP Morgan, Bank of America, Wells Fargo, American Express. We've been Citi. We've been in and out of all of those, and those have been generally where the quarter has been carrying those stocks higher. So my mistake wasn't buying financials. My mistake was buying Visa. So sometimes it's not whether the hourly is choppy or the daily is in a trend or whether we should be day trading. Sometimes, and this is very much part of the process, right? This is very much part of top tier. When I look at these indicators and I say, all right, which one has the best trend? Where the trend is where the follow through is. And where the follow through is, that's where the money is. That's where the cha-ching is. The follow through is what pays us. That's what turns an entry into a 2, 3, 4x winner. That's what we had when BITO. That was the trend. So that's why we have to be trend seeking traders. We have to mercilessly look for those trends in a way that suggests that that is the most important thing we're looking for, right? Mercilessly. And sometimes that means, yeah, we may not trade something that we want to trade for favor of something that has a better possibility for trading. I think for a long time, folks were asking me about within that XLF. Here's a great example, Goldman. Why would I trade Goldman? It's stuck in a range. And eventually it might move higher, but why not trade JP Morgan, which was trending higher, Bank of America, Wells Fargo, American Express. Those trended beautifully for the quarter, yielding multiple entries while Goldman moved sideways. What an awful way to tie up your money, right? When you could have been growing it elsewhere because of the trend, because of being able to say, okay, let's look from the top down, kind of top tier down. Where is the follow through most likely? So I hope that makes sense. I hope that makes sense. All right. That is that SLV. Sure. Silver. So SLV is the ETF for silver. I do want to start keeping an eye, a little closer eye on silver, but I'll tell you this, Tony, right now we're sort of tethered to a copper narrative. We're tied to gold narrative. And yeah, it makes sense to possibly look at silver. So I'll tell you what I'll do, although I don't have any skin in this game, but at least let me show you what you can do. Wait for the top tier to show you we've got a trend. That's the energy, right? Words like trend and momentum and structure, they're all good words. But I've been sort of leaning towards this word energy because those other words are used a lot and they mean different things to many people. What's a trend to one person may not be a trend to other. What's bullish momentum to one may not be bullish momentum to another. What's trending structure versus choppy structure, again, that varies. But energy, I think all of us can wrap our heads around that. Which way is the energy? It's up. I have green, right? So this is what I'd say. We could get a combination of a mean reversion and the daily price movement range, but it looks like the daily price movement range, is going to likely be, right, what we're focused on. So I would focus on SLV or even ideally SI in the daily price movement range. Yes. All right. So that is what we're looking at. Gang, I'm out of time and I don't want to tie everybody up. After all, it is Good Friday, but I wanted to at least, open up the office here, talk a little bit about what it is I've got going on. What are those open trades? We did that coverage of the PCE earlier, so you can go check that out. And then we'll see what Q2 brings us. I hope that look at COIFIN. Look at the month to date, because month to date is the most recent view of the strength from the 3 months of the first quarter. Look at March, and then we'll look at that as that recency bias that will influence April. That'll influence the beginning of Q2. As always, gang, thank you for your time. Thank you for making Charts and Coffee what it is. This is now over 3 years. We've been doing this show every morning, 9 to 9:20. So thanks for making the show what it is. Thanks for your questions. And I'll see you all. I'm not sure that we're going to do a Sunday top tier. I haven't decided. I'd rather not put a show on Easter, but I'll probably be here in the office looking. So heads up for that if I decide to go live with that. But I'll definitely see you all on Monday for Charts and Coffee. Be good to each other, gang. I'll talk with you soon. And if you haven't already, again, as we wrap up, well, 2 things. If you haven't already, maybe take a snapshot of that or jot that down so you understand the cylinders and the motors. And then we'll talk about March. We'll talk about March on Wednesday. Big reveal on how we do in March, how we've done so far in the first quarter. We'll be talking about the top tier tools. That has been the way we have been growing the account. All right. I'll see you then. All right. Until then.